So this is a video I'm making simply because I talk to friends or other investors all the time. I've been doing this for a solid decade plus now, and you probably know me either from TradingView, possibly some other companies such as StockTwits or the tools I've built there. But this video now is specifically focused on a topic. I think I'll do this in 3 minutes, and that topic is fundamentals. So if you're a new investor, this video is literally for you, because my guess is you probably heard about Apple, and one thing you've probably heard about Apple is just how much revenue it does. So you've probably heard that Apple does $119 billion in revenue within 3 months. Now, first of all, that number is pretty much impossible to comprehend. $119 billion. So remember, this is a quarterly chart, so that's 3 months. Whenever you hear someone say quarterly, that's every 3 months. So there's 4 quarters in a year, 12 months in a year, 3 months makes up a quarter. So within 3 months, Apple did $120 billion. Well, $119 billion. Mind-boggling. So you hear that, you say, well, Apple's definitely a buy because it does $119 billion in revenue. But you have to remember there's so much more that goes into that. And that's kind of the point of this video, is to really help some of the new investors out there understand that it's never that simple. Because most importantly, this number is in the past. This is probably the most important thing that investors forget. This number is literally in the past. It's happened, it's done. It's now in the company bank account, it's been paid to employees, or it's been paid to investors. It's done, it's gone. It's gone through the cost structure to build new products, R&D, you name it. So that's really tip number 1 in this quick video. Too many new investors quite literally use past data to think they can make great decisions. But the past data is gone, it's in the past. It's already being utilized. The real question that investors are doing, or that you should be thinking about, is what's going to happen in the future. Because if you buy Apple here where it is now, and revenues actually go way down, well, actually you got a horrible deal, because you bought it here thinking that this would be its revenues, but in the future, actually, revenues went way down. Maybe a new competitor built a new product. Maybe people just stopped buying phones all of a sudden. I don't know. But the point is that every time you buy or trade or invest in a symbol on a fundamental basis, it should be about what you think will happen in the future. It should not be about this past data. So when you see some clickbaity stuff like companies with the most revenue in the world, or things of that nature, just recall that that's cool and that's interesting and that can get you started in your research, but it quite literally means nothing for right now, because the real professionals out there, the hedge funds, the traders, anyone who knows about anything about markets and is studying these stocks and companies on a daily basis, they are not buying or selling Apple based on last quarter's revenue. They've already actually projected revenue out for the next 5 quarters or 10 quarters, and then they are backing those numbers into the current price. Now in a future video, you'll probably learn about discounted cash flows, but this video is really for the new investors, because I can't tell you how many friends or people I talk to who say things like, Apple does $120 billion in revenue a quarter. And by the way, that is amazing, and that really is an accomplishment. Let's not forget that. That is simply fantastic. But don't forget, what happens if by next quarter they're doing 0? Well, so you bought here based on what they did in the past, but in the future they do 0? Well, the company is probably a 0 then in the future. Of course, they're probably not going to do 0. That's just a really extreme example to get your mind turning as to what this means. But the next time someone says, hey, look at this fundamental metric, just remember, yes, that's important. Yes, it matters. But what's more important is, what can you expect in the future? Do you think it will continue to climb? Do you think they will do more with this? Do you think they will squeeze more profit out of it? Do you think it will grow or shrink? Then you can start to make a better decision whether or not buying now makes sense. After all, it's just like any other betting mechanism that you probably have played in, whether it's gambling, say you're playing blackjack, or say you're doing sports betting. You're always betting on future outcomes. And so when you're in markets and you see and hear about fundamental metrics, which are incredibly important, go learn more about them. By the end of this year, I'm going to have tons of videos on my YouTube channel about this. Just remember this key fact. past data is great. It can be very helpful. But more importantly is, what are you modeling for in the future, and what does that mean to the price today? Because, as a final example, if you believe or have information or have done research or have really discovered a new product that can change anything, that next quarter Apple's revenue will jump to 160 billion, well then just maybe it makes sense to get in because the market's missing that. And actually a great example of that is Nvidia. You can quite literally see this in real time on the Nvidia chart, whereby Nvidia, you can see, where does this run up really start? Actually, it's been such a jaw-dropping run up. We can see it right here, this gap up. Nvidia essentially shocked everyone with this $13 billion number, because they were doing $7 billion before, and it went to $13 billion. I mean, that's a massive increase, right? To go from 7 to 13 in 3 months, what changed? They went from 13 to 15 in another 3 months, what changed? This is a very, very, very big deal in terms of these revenue jumps, and the market clearly wasn't pricing it in, because you can see the chart now reflecting that. But at a certain point in the future, investors will start to understand that maybe these numbers are flatlining, or maybe dropping, or perhaps they'll keep going up and the chart will continue to price that in. The point being, though, is that this is where fundamentals come into play. It's all about what might happen in the future. So I hope this quick video in under 10 minutes helps you. Any questions, leave them in the comments below. Please subscribe if you want to get more videos like this. I'm just rebuilding my YouTube channel, so let's do this. Thanks a lot for watching.